What's going on, family? This is not financial advice. Do your own research, man. We just got some numbers for you guys. Then we gonna get straight into the charts. All right, so we're gonna be talking about the mortgage rates here, and then we're gonna be talking about CPI, which is the inflation rate, so the consumer spending, and we're gonna get straight to it. So this is something that I found interesting. The 30-year mortgage rates are doubling year over year. So check this out.
Are keeping many would-be home buyers on the sidelines. Let's put all this in perspective for you. The latest data out from Freddie Mac showing that the rate of a fixed 30-year mortgage is now at 6.33%. That's nearly double what it was a year ago when it was at 3.45%. So here's what this means for you, the potential home buyer. We use Bank Rate's mortgage calculator, which takes into account a number of variable costs, and those include credit score, property tax, and also homeowners insurance. So say you're looking to buy a $500,000 house, putting 20% down, which means that you're going to be paying $100,000 up front. That means that your monthly mortgage payment will be $2,878 a month. But if you bought that same $500,000 house a year ago when the rate was almost half what it is today at 3.45%, and you put 20% down, once again, your monthly mortgage payment would be $2,180 a month. That's a difference of $698 a month, $251,000 in interest over 30 years. When you take a look at those numbers, take all of this into account.
So as you can see, this is not good. So we're going to have a higher inflationary period for a longer period of time. So if this continues and they can't get inflation down, we will have what they call a period of stagflation, where the rates are continuing to be high and the economy is still slowing. So it's something to think about when checking out this market, man. So we're gonna get into the CPI, and I thought this was really interesting. Everybody's getting bullish for some odd reason. I don't know why, but even though the inflation report came out as expected, it's still 6.5%. So check this video out, man.
0.1% between November and December, but they're still up 6.5% from a year ago. Now, in real terms, that means that you're paying about $400 more on the same goods and services each month. And that is some relief from the summer when that number was almost $500. Now, in addition to feeling this inflation in rents, which are up 7.5% from a year ago, you're also seeing it in things like services, childcare, medical costs, dining out, and Americans are especially feeling it in food at the supermarket. A gallon of milk runs $4.21 versus $3.74 a year ago. A carton of 12 eggs on average now costs you $4.
Now I'm gonna pause this here. So I thought this is absolutely insane. So a gallon of milk now is $4.21 on average, and a loaf of bread is $1.84. A dozen of eggs, just a dozen, is $4.25. That is insane. What's going on with this inflation, man? It's crazy. Child care, health care is even costing more. So everybody's feeling it.
$25. A year ago, that was less than $2. And eggs are way up even more than other food items because of the bird flu. Millions of birds wiped out. George?
And of course, this could affect interest rates as well, which means potential changes for credit cards, mortgages, bank accounts.
Absolutely, and that's what's key, George, because the Fed is watching these reports with great interest, and it is likely to hike interest rates again next month because inflation remains too high. So that makes borrowing more expensive, and we especially see it in credit cards. The average APR for a credit card hit a record 20.4% in 2022. You want to pay those bills quickly. The positive here is that you are also getting paid more money to save. There are high yield savings accounts right now offering more than 4%, George, which is why it pays to shop around for that savings account.
You don't want to be paying that credit card debt.
No.
Well, hey there, GMA fans.
So this is really interesting, man. The credit card average interest is 20%, man. 20%. So you're borrowing money at a faster rate because of the inflation, and you have to pay it off just as fast because it's 20% on whatever you buy. It's insane, man. So just keep these stats in mind, man, when you looking to invest, and especially check out the commodities that are doing well during this period, man. So let's keep that in mind. We're gonna get straight into the charts. So we got a couple of things that I noticed. We're gonna check out the first one, which is IWM, the small cap stocks, and I did notice that this is coming out to a critical level up here about 190 area to 188. So this is a very strong resistance. They turned down here once, twice, three, four times. So this is a potential zone to get short. Up here I have an alert set. This will be, well, I have two alerts, but this will be a zone that I will be looking into next week. I will be trading IWM as well as the S&P, but this is a potential trade for me. So just keep that in mind. IWM is a good stock to look at. You can also trade other indexes as well. So just finding trades that I like in the near future. So I do want to check out BBYW. So as you know, this thing rallied up. This thing was $1.29, $1.27, something like that. This thing went all the way up to, what is that, $5.87, and they made a huge drop. They dropped almost 30% in 2 days. So this is the reason why you don't trade these stocks, man. You cannot trade these meme stocks. Everybody's getting long on Bath and Body. Look at that big old rejection candle. You know what follows after these candles? A huge fallback. They might even come even lower. So I did build a short position up here around $4 and some 50 some cents, and it's working on 30%. I'm expecting at least a push down to $2 on this move because they had no business shooting up that fast and that high. So usually people are, when they see this move up, BBBY is rallying up like this, everybody's buying. Oh, look at BBBY. Everybody's buying and they're getting trapped, running with the crowd. They're trying to get long way up here at the highs, and this thing had no reason to be shooting up like this. So nice short position. I expect to see more downside next week. They could just completely fall straight down and just shoot straight through, make new lows. I would not be surprised at that either. And then we got the big dog. We got S&P 500. This is my main chart. I trade. As you see, we're at the trend line. We're at the moving average. We at the gap fill. They did not reject off the zone. We're at the 618 of this leg. I'm going to just put that on the chart so you can see it yourself. The fib levels are real, man. So we're just going to show you this. Kind of push through the 618. In between the 618 and the 78. At the trend line, at resistance. They already had the short squeeze. So if they push through this and they keep going, that is a clear sign that this move is fake. If they just keep pushing on through all this, pushing on up, you know the move is fake. So you can expect them to be dropping somewhere in between here, somewhere between 4,100 to 40. Where's the zone? 40.15 looks like 40.20, somewhere in there. So don't get too happy. Inflation is still high. They are continuing to raise rates. So don't get too happy buying a whole bunch of stocks. It doesn't make any sense, man. So we have not had a definite bottom yet. So there's no reason to be buying a bunch of stocks. So I'll just be cashing up at this particular moment, man, just waiting for the opportunity. We're going to get great opportunities this year. And I'll be right there with you guys, man. Hit like, subscribe, man, so we keep this content pumping. And I'll see you guys tomorrow.